If you're the kind of person who keeps on trying to time the market but you always end up late, then this video is for you. Because right now something is happening behind the scenes, it's driving headlines, it's moving markets, and most importantly, it is your chance to beat the crowd. Not by reacting to price, but by anticipating it. Stick around because I'm going to show you the signal that smart investors are watching and how you can use it to profit in the next few months. Now, let's dive in. How millionaires are predicting every Bitcoin pump. Here is how, and how they do it even months in advance. Now, let's dive in. I'm going to start off the bat with this statement. Bitcoin is directly correlated to global liquidity. Here you see a tweet by 𝗗𝗶𝘀𝗰𝗹𝗶𝗺𝗿. He's saying once global liquidity starts rising, Bitcoin will skyrocket. So here you see 2017, you see liquidity and you see Bitcoin's price. And what happens? After liquidity started to surge, Bitcoin started to follow. Now we are in Q1 2025. Global liquidity has gone up quite significantly, which generally means that Bitcoin is about to skyrocket next. Now, if you're looking at this video and you're wondering, Mitchell, what is global liquidity? What are you talking about? Well, global liquidity is the total sum of all of the money that's in circulation. So all of the dollars, all of the euros, all of the yen, all of the pound, and all of the other currencies that are circulating around the world. So if you add those up, then you get the global liquidity. And over time, global liquidity expands as central banks around the world are printing more money. That's just how the economy works. And here is an article by Lyn Alden. So Lyn Alden is a well-known researcher in the investment space. And she wrote this article called Bitcoin, a Global Liquidity Barometer. And in this article, she claims that Bitcoin always tends to follow liquidity. Meaning that if liquidity goes up, so more money is being printed, then a lot of that money goes directly, then Bitcoin tends to follow the direction of the global money supply. And here you see this diagram. It's called the directional alignment with global liquidity within a 12-month period. And you see that Bitcoin has an 83% correlation with global liquidity, meaning that, if global liquidity goes up with 100%, for example, then Bitcoin tends to go up with 83%. That is the correlation that we've seen over this 12-month period in which this analysis was made. But here's the thing. Bitcoin doesn't go up right away when the global money supply expands. It follows with a lag. So generally there's a 100 to 150 day lag of Bitcoin following the global money supply. So here you see this tweet by Mr. Crypto. He's saying Bitcoin follows global liquidity with a lag. Global liquidity has been rising since January, so for the past quarter. And what comes next is then obvious. That's the correlation that we have been discussing here in this video. Here you see a great chart. So here is the global money supply, and it is shifted forward with, I believe, 100 or 150 days. So if you take the price of Bitcoin, which is, the line that you see here with all of the red and green bars, and you take the money supply, but you shift the money supply into the future because it's leading or Bitcoin is lagging, however you want to see it. And then you see that Bitcoin generally tends to follow the money supply, actually quite well. It is very close to the yellow line. And what is the yellow line doing now? It is shooting up all the way to the top right corner. And if Bitcoin follows the same trajectory like it has been doing ever since its inception, then it will probably mean that Bitcoin is going to go up from here as well. In fact, at the time of recording this video, Bitcoin is pumping quite hard. And I'm really curious to hear your thoughts. Do you believe that Bitcoin is going to pump or dump from here? So type pump in the comments below if you think it's going to pump, and type dump in the comments below if you believe that Bitcoin is going to dump. So I'm curious to hear your thoughts. Here you see another chart, which is the M1. It's basically the money supply of the US dollar. And this was updated on the 25th of March. But what is interesting to note is that 80% of all of the US dollars that are in circulation have been printed in the past 5 years. That's how fast the money supply basically went up. And I mean, we're going to talk about that later, but this makes the case for Bitcoin, of course, very strong, because if money can be printed out of thin air with just a few clicks, and trillions of dollars are being printed out of thin air with just a few clicks, then what is the value of that fiat money that you're holding? And this is not only true for the US dollar, it's also true for the euro, the yen, the pound, basically every single fiat currency. So that shows you how fast the money supply can be expanded. And but the good news is that it's a double-edged sword, meaning that if you are saving, and I think Robert Kiyosaki says this the best, savers are losers. Why? Because if you're holding money in your savings account, then in a few years from now, that money will be worthless. You'll be able to buy a lot less products and services with the same amount of money because there's more units of money in circulation. That's how inflation works. On the other side, inflation is good for assets because when there's more money in circulation, all of that money will flow into really great assets that can appreciate in value over time. And that's how people protect their buying power and even outpace inflation. So a major spike in global liquidity is underway, and it's finally making waves in the headlines. So here is a article by Blockchain News. It's saying global liquidity breakout signals are imminent. Bitcoin price surges. So here's an article by Bitcoin Magazine, how expanding global liquidity could drive Bitcoin's price to new all-time highs. So this is now basically the narrative within the crypto space. What's important to understand is that within the world of investing and very much in the world of crypto, people like to look for narratives. So what are the narratives? For example, Bitcoin is digital gold, or Bitcoin is a safe haven asset, right? So in times of inflation, people want to find hard assets. Right now, the story is, with so much money in circulation, people are searching for hard assets, things that the government can just produce more of with a few clicks of a button, because those are really great source of value. So Mike is saying, there is a lot of noise in the market right now, but what's important is that M2 is spiking, all right? GameStop is buying, yeah, that's right, they raised $1 billion. Saylor keeps on adding more Bitcoin every few weeks. Other corporations are loading, nation states are scheming, and the blocks keep minting. So he's saying that's $1 million per coin is inevitable. It's just math. And I don't think, I actually think that's right. I very strongly believe that one Bitcoin can go to $1 million per Bitcoin because it's simply a matter of supply and demand. There's so much buying pressure in the market right now with all of these entities that want to accumulate Bitcoin. And there's just very limited Bitcoin. And on top of that, money is becoming worthless because 80% of the money supply has been printed out of thin air in the past 5 years. So why the sudden rise in Bitcoin's price? Well, let's have a look at these charts. Here you see the money supply of China. So here, basically from 2017 to 2023, China's money supply was basically one straight line up, and it doesn't show any signs of stopping. So it's just crazy. Look, they're printing. They more than doubled the money supply within this chart, and that's less than that's like in the past 10 years they doubled the money supply. Here you see the money supply of different economies: China, United States, EU, Japan, Germany. And you see between 2008 to right now, you see that all of these economies have expanded their money supplies, except for Japan, which remained roughly stable. Now here you see the chart over a longer time frame. So from 2008 till right now. So this was a compacted time frame. This is the extended time frame, but basically the message is the same. most of the major economies around the world, China, US, EU, they are expanding the money supply, meaning that there's inflation, meaning that every unit of money is becoming worth less over time, and this is a trend that keeps on repeating itself over time. And generally, whenever a trend or pattern has been repeating itself for a long time, then generally that can be assumed to be the path forward. So if economies or central banks have been printing money for the past decade or decades, then probably they will remain doing that. And it's just almost like a drug. If you have the opportunity to print money out of thin air to solve your problems, then why solve the issues if you can just go for a quick fix and print some money, right? Hey guys, by the way, if you're enjoying watching this video, do me one quick favor, smash the like button so I know that you're getting good value out of it. And if you haven't done so yet, also make sure to subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on and to make sure that you position yourself for maximum profits. Now, let's continue. So with all of this new liquidity, Bitcoin is probably going to follow. Bitcoin didn't get the nickname the liquidity sponge by accident. It's because how reliable it soaks up excess liquidity. That's also what we discussed with the article of 𝗗𝗶𝘀𝗰𝗹𝗶𝗺𝗿, the 83% directional correlation with global liquidity, meaning that Bitcoin almost perfectly follows liquidity. So here you see another chart, and on this chart you see the black line is the year-over-year Bitcoin price appreciation. So you see that in bull market years, the price of Bitcoin tends to shoot up very much. And the blue line is a liquidity. So what can we see whenever this blue line tends to go up, which is the year-over-year increase or decrease in the liquidity, then generally Bitcoin also tends to go up. So here the blue line goes up and then Bitcoin tends to follow. And you can see that they move in the same direction. And what is happening right now, we are about to embark on another liquidity explosion. And that generally means that Bitcoin will probably follow. And many experts believe that this is going to be the biggest bull market in history, because there's just so much money printing going on and everyone is desperate to hedge themselves against this inflation and to store their wealth in hard assets. That is the narrative right now. Everyone is searching for the best hard assets. So gold is exploding, setting new all-time high after new all-time high, and Bitcoin is also on track to follow that same trajectory, because there are two different assets within the same narrative. Then here is another chart basically saying the same thing. So the blue line is global liquidity, meaning all of the money that the Fed has printed, the European Central Bank, the People's Bank of China, the Bank of Japan, and a bunch of other central banks. So you see that in the past, a little bit more than 10 years, this line has basically gone from, it has basically gone up quite significantly, and Bitcoin followed that same trajectory. So if history repeats itself, then, which it's never a guarantee, of course, but a very big likelihood that it will. So here's a tweet by 𝗗𝗶𝘀𝗰𝗹𝗶𝗺𝗿. He's saying this is one of the two most important market movers of Bitcoin. As I said a few months ago, Bitcoin is a liquidity sponge and therefore absorbs available liquidity from financial markets. Unfortunately, liquidity was dropping since September 2021, but now it's increasing. So why did liquidity drop since September 2021? Well, in 2020 we had COVID and governments printed so much money, and with so much money printing, inflation went up very significantly. And in order to gain control over the inflation, central banks had to resort to quantitative tightening, meaning increasing the interest rates and reducing the money supply. But now liquidity is increasing again. This tweet talks about, now let's talk about the risk on sentiment. So post-election, there is a psychological shift. Investors regain confidence, taking on more risk. Bitcoin, as one of the most speculative assets, benefits big time from this influx of capital. Remember, BTC is a big, hungry liquidity sponge. And gold is also tracking global liquidity very well. So here you see, so the green line is global liquidity, and the orange line is gold. So again, gold is a hard asset, and in times of massive money printing, people are searching for safe haven assets, hard assets that they can protect themselves with against inflation. And gold has already gone on a massive rally, and I believe that Bitcoin is going to follow very soon. So right now you might be wondering, if if gold is already pumping, why shouldn't I just buy gold instead of Bitcoin, which was made a little bit of a correction from its all-time high? Why wouldn't you just go for the thing that's already pumping? Well, if you ask me, then here is my assumption, or here's my investment thesis. In any case, I am a big believer in a diversified investment portfolio. I believe that you should never put all of your eggs in one basket, and diversifying across different asset classes and even different assets within those asset classes is always a great idea. But if you ask me who or which one has better growth potential in the next few decades, I certainly believe it's Bitcoin. Why? Because money can be printed out of thin air, and it can happen infinitely until at one point the people will just rise up and say, hey, this money isn't worth anything anymore. Last night I was scrolling on X and I saw a video of money in Venezuela, and people just threw away their money, and it was somewhere along the road or along the side of the road. You saw piles of money that were just worthless, and that's what happens when people print infinite amounts of money. So to protect against that inflation, people find assets with limited supply. So gold is scarce, meaning that it has a limited supply, but the supply can be expanded at an additional cost. So let's say that you're mining mining gold, and you have already depleted all of the gold in your gold mine. But maybe if you're willing to drill deeper, then you might still find gold. But drilling deeper might require you to make additional costs, or to upgrade your mining equipment to get more expensive machinery that can drill through stone or whatever, some kind of soil. So yes, you can probably produce more gold. People are also talking about mining asteroids. So again, that's a very expensive operation, but I mean, at an additional cost, it is possible to acquire more gold. However, it's not possible to create more Bitcoin. There will only ever be 21 million Bitcoin that will ever be in circulation. It will take more than 100 years for the final Bitcoin to be mined, but when those 21 million Bitcoin are mined, you cannot expand the supply even further. And there are estimates that expect that around 1.5 to 3 million Bitcoin are lost because people forgot their passwords, their private keys, or have a crazy ex-girlfriend that threw like hot water over their USB drive or hard drive, and they can't retrieve their Bitcoin anymore. Yep, these are real horror stories that actually happened. But yeah, if you ask me, gold right now is a $20 trillion market cap asset. Bitcoin is a $2 trillion market cap asset. And I believe that Bitcoin has many of the similar properties as gold, but in many cases even better. Most importantly, the fact that it's much more practical to store and transport large amounts of Bitcoin compared to gold, because that creates a lot of complexities. You need to pay very high fees for securing your gold, for transporting your gold, maybe insuring your gold, getting a special safe, security guards, or using a custodian that charges like 2% per year. So yeah, I mean, I think Bitcoin just has a lot greater characteristics. And here's how I see it. Fiat money will always keep on going down in value because central banks and governments are just addicted by how easy it is to print more money to save their assets, basically. Gold is a hedge against inflation. It's basically a way to protect your purchasing power. But Bitcoin is a way to grow your purchasing power. So I'm pretty sure that you've seen this meme or this infographic circulating on the internet that life becomes easier when you save in Bitcoin. For example, 10 years ago, a house would be, 1,000 Bitcoin or more. 5 years ago, it would probably be 200 Bitcoin. And right now, you can probably buy a house with 3 Bitcoin. So if you're accumulating Bitcoin, then over time, life tends to become easier. And that's why some individuals, some corporations and other entities have made it their sole goal to accumulate as much Bitcoin as humanly possible. Because Bitcoin is the only truly scarce asset out there with a maximum supply of 21 million Bitcoin. You can almost compare this to a Mona Lisa or a Vincent van Gogh painting, which has a very limited supply. There's only one Mona Lisa. There's only one version of every Vincent van Gogh painting. And because it's so limited and because there's such high demand, the price of that particular thing tends to go up in value over time. Whereas gold, there is high demand for gold. And it's even used in certain technologies and production and even jewelry. But the supply of gold is increased over time. Here you see the gold supply goes up. And the gold market is very untransparent. So we don't really know how much gold is extracted from the soil every single year. And we don't really know how much gold is already out there circulating. For example, Fort Knox, which is where the US gold reserve is stored, they don't even want to get audited. So we don't even know how much gold is in Fort Knox. They don't want to open their doors and share it with the rest of the world. So yeah, I think there's a lot of shady things happening in the gold industry. Now here's an interesting chart. It shows the it shows the price of Bitcoin priced in gold. So basically how much gold you need for 1 Bitcoin. And you see right now we are in this pattern, in this triangle pattern. And generally when we proceed in this pattern and go to the upside, at one point it will break out and it will appreciate a lot against gold. That's what I believe is going to happen. So I think that Bitcoin is going to outperform gold like it has done in previous bull market cycles and over the long term. So yeah, I'm really curious to hear your thoughts. Do you believe that Bitcoin is going to outperform gold? Gold has gone already on a really nice rally this year, but do you hold the same assumption as me that Bitcoin is going to outperform gold in the next few months and in the next year? So how is smart money playing this? Well, smart investors, they don't chase price. They front run liquidity. So we mentioned before that historically Bitcoin has been a liquidity sponge, and we can see the chart of the global liquidity. Now, if all of the signs are pointing at an expansion of the global liquidity, then what is one of the smartest moves to do right now? To accumulate as much Bitcoin as possible, because historically Bitcoin tends to follow liquidity. And that's how you beat the crowd, not by reacting to the price, but by anticipating it. Now, let's wrap it up with this tweet from TechDev. He's saying, let's make this clear. As the business cycle bottoms, so enters the red zone, then global liquidity leads Bitcoin. Whatever it does, Bitcoin does it a few months later. So what we mentioned before, liquidity tends to lead Bitcoin's price. A liquidity breakout after a retest starts Bitcoin's parabolic leg. That's what matters, not the halving, not the ETFs, not the tariffs. Follow what matters, and that's liquidity, guys. All right, I hope that you enjoyed watching this video. I hope that you now understand what crypto millionaires, hedge fund managers, large institutions, market analysts are looking at when they're trying to predict the movement in the price of Bitcoin. It is global liquidity, and right now we're seeing that global liquidity is exploding. So now you know what to do, what to look at, And if you enjoyed watching this video, then make sure to smash the like button. For me, it's good feedback to understand whether you like this video or not. And if you haven't done so yet, also make sure to subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to make sense of everything that's going on in the market and to help you to position yourself for maximum profits. Thanks for watching.